ICICI Prudential Life Insurance Company and the team of book running lead managers. It's my pleasure, ICICI Prudential Life Insurance Company. Let me first begin with introducing the dignitaries on the stage. We have Mr. Satyan Jamunathan, who is the Senior Vice President and looks at finance. We have Binoy P, who is handling the business across Tamil Nadu and Kerala for the company. Managers, we have Prudential, who is from ICICI Securities, GM Financial Institution Securities. It gives me immense pleasure, this particular initial public offering of ICICI. Hand over the baton to Satyan. Let me just run you through some of the key highlights of the opportunity. Of course, there is a strong, the issue opens for the public on Monday, 19 September and closes on Wednesday, 21st September 2016. The estimated listing date is Thursday, 29 September 2016. In terms of the issue structure, this is an offer for sale of 18.13 crore equity shares by ICICI Bank, of which there is 10% reservation for the ICICI Bank shareholders, and the balance will be the net offer. Of that, 50% will be offered to qualified institutional bidders. Again, 60% of that will go to anchor investors. And of the balance, 35% will be to retail investors and 15% will be to HNI investors. The price band is rupees 300 to 334 per share, which translates to an issue size of rupees 5,440 to rupees 6,057 crore. We look forward to your support to making this IPO a grand success, and I would now request Satyan.
Chennai, I have very fond memories. A large part of my education I spent in Chennai. I am a loyalite at what we then used to call the tallest building in Chennai, which is the LIC building. I would like to just walk you through some of the key elements of the business of the company and some of the performance and results that we have had over the past few years. And after that, we will be happy to take any questions. If you look at the context that we operate in, what we have clearly is that the Indian market is one of the fastest growing large economies in the world. And we have a very strong savings orientation within the Indian retail public. Insurance has been a very, very important part of this. And what we also have is that India is a very young population with a median age of 28 years. All of this, we believe, will be a very strong opportunity for the insurance business in this market. Within that context, ICICI Prudential, promoted by ICICI Bank and Prudential in 2000, has been the leader in the new business on the retail weighted received premium for every one of the years that we have been in business. We distribute through a variety of channels, including banks, individual agents, brokers, as well as our own employees. We have a very strong capital position at 320% solvency ratio as compared to the regulatory requirement of 150%. We have been focused on delivering returns to our shareholders with an ROE of more than 30% each year since 2012, and have also been consistently paying dividends since 2012. We are largely a retail business, and at over 1 lakh crore of assets under management, we are one of the largest retail fund managers in the country. The elements which form a core part of ICICI Prudential comes mainly from the fact that India is the world's 10th largest insurance market and Asia's 5th largest insurance market. One of the things that we have had as a track record for ourselves is that while the industry has gone through a variety of cycles in these 15 years, we have been able to retain a leadership position consistently across all of these cycles. At the core of what we do is the customer value proposition that we are seeking to deliver. As in any retail business, unless we have the confidence of the customer, the sustainability of the business comes under question. And this comes through a variety of dimensions such as products, the performance of our funds, as well as through the servicing as well as the claim settlement of the company. Like I said, we operate through a variety of sales channels. We have the largest bancassurance distribution for 2016. We also have the largest direct sales force distribution for 2016 in the country. and one of the largest agency distribution in the country. Digitization has been at the core of the way we have managed our business. And to us, digitization has been about providing the power to our distributor to use his time more effectively and therefore enhance his productivity. And I will talk through some of the results of that comes into our business a little later. It is not enough to just sell a product and be done with it. The sustainability of the business model is what sees companies exist for many years. And in that area, we are very focused on making sure that the risks on the balance sheet are managed well, the persistency is managed well, and the expense ratios of the company are managed well. Clearly, all of this also is about delivering consistent returns to shareholders. I spoke about a return on equity in excess of 30%. We also had our value of new business growing by 53% in the last year. We have been self-sufficient on capital since 2009, and given our solvency position, we are well positioned to capitalize on the growth opportunity. I spoke about the demographic advantage of India. Clearly, India is one of the largest growing populations, and within that, a very large share of working population. And the real GDP of India is expected to be one of the fastest in the next few years, and even surpass that of China. Structurally, India has a large pool of household savings, and what we have seen in the last few years is a shift from physical savings into financial savings. Life insurance at its peak in 2010 was 26% of financial savings, which currently is at 19%. And this clearly indicates a significant growth potential. The other part which is very relevant to the Indian market is Swiss Re carried out a report, an analysis on the protection gap in India. And the report set out that the protection gap in India was $8.5 trillion US, which was much higher compared to its Asian counterparts. And distribution architecture to make sure that the customer can choose what mechanism he needs to be able to interact with us. Technology being leveraged to deliver profitable growth continues to be a focus area. And all of this, along the way, expanding the value that we deliver to our shareholders through expanding the protection business, through improving the persistency, and through maintaining the cost efficiency journey that we have been on. Thank you so much once again for being. Customers always keep evolving over a period of time. And therefore, there are times when customers look to seek different kinds of products. And if that indeed does change, for example, one of the key drivers of the profitability of the company is the growth of the protection business. If we are not able to grow the protection business in the fashion that we are expecting to, that would have an implication on the profitability of the company.
What means the percentage?
Protection today is 2.5% of our new business. Most importantly, we see the protection opportunity in this country as being very significant. And therefore, as long as we continue to stay focused on the proposition that we are delivering to the customer, we do believe that we can continue to grow and expand this market and continue to grow the share of that business.